Good afternoon, everyone. This is Michael Browne. I'm the head of commodities at Barchart. Happy to be with you here this afternoon for this webinar around weather and crops and an update to that effect. I'm joined today by Kevin Marcus, founder and president of Marcus Weather. I'm going to have Kevin just introduce himself, and then I'm going to run through just kind of an update on Barchart and some of the things that we're doing around our different products and services. And then for the real meat of the webinar, we're going to turn it back over to Kevin to hear about the current state globally on weather impacts and maybe an update on the crop tour that Kevin just completed. So Kevin, if you want to give an intro of you and Marcus Weather.
Thank you, Michael. Yes, thank you. This is my 41st year of doing commodity weather analysis. My background is both as a meteorologist and an agronomist, and I've been working in the field here, as I said, first 20 years with Cropcast, now Maxar, and Director of Sales and Marketing and Product Development there, and crop modeling as well. And we rolled that into Marcus Weather about 20 years ago to take it to the next level of analysis of what is it that the commodity traders need to know. And basically, the bottom line is you want to make money. So weather's a means to an end. So we connect the dots between the weather and the trading decisions that need to be made around the weather and crop impacts and balance sheets. So I think that's, in brief, that's how we pull the information together with the goal of providing crystal clear ideas on what's happening with the global crop yield and production and balance sheet developments on a daily basis, so that the hedge funds and food companies who are our clients can make better trading decisions.
Okay, perfect. Thank you, Kevin. I know you'll all be anxious to get back to Kevin and what some of his insights are for this crop year. So let me just kind of quickly go through some of the commodity view and other services by Barchart, and then we'll go from there. Okay, so Barchart provides solutions to agribusinesses, and not just agribusiness, but for the purpose of this webinar, that's kind of where we're focused. But we do cover all of the commodities, whether that's energies, metals, soft commodities like coffee, sugar, cocoa, and so on. But in this particular case, we're kind of focused on the agribusiness solutions. And for sure, that includes Commodity View, which is really the merchandiser one-stop shop platform. And we'll talk more about that. In the middle of the screen there, you see our marketplace app, and that's our fully branded app that we provide to grain elevators to provide to their farmers. And that provides all the information that a farmer needs and provides the connectivity back to the merchandiser. And we also provide content management tools to the grain elevators. This can be, managing their cash grain bids. It can be publishing content to their website and their mobile app and so on. So we'll talk about each of those areas. The entire solution set, and it really is a suite of solutions, is really powered by three things: content, connectivity, or drawing all those different systems together, and workflows, and helping streamline and manage those workflows. So from a content standpoint, we cover global market data. So don't limit yourself to US data. We cover all the major markets around the world. On the news side, also very important, we have a network of syndication partners that provide us content. We generate our own proprietary content, and we have a premium news service through Dow Jones as well that's bundled into our Commodity View Pro. On the fundamental side, we have probably the largest fundamental database available for global commodities. So again, not just USDA, we have other reporting organizations in the US like BLS, EIA on the energy side, and others. But globally, we also have CanStat, Eurostats, CONAB in South America, CPA in South America, and so on and so on. So a very, very broad fundamental data set. We also have third-party partners that provide us with pricing, and that can be, around grains, such as maybe Macaris with their provision of organic and GMO grains. as well as biofuels and metals and all sorts of other contributors that provide pricing data for us. And we'll see more of that in just a minute as well. And then we generate our own proprietary data, whether that's cash prices, price and basis indexes, yield forecasts, and so on. On the connectivity side, we have probably the widest partnership of ERP providers that we are currently integrated and connected with. This really gives us the ability to, in the next column there, enhance those workflows by really providing that connectivity between our solutions and third-party solutions. We have a very large elevator network. I'll show you more of that in a minute, but it really allows us to very easily onboard new elevator customers and create a new hub-based network for them with their farmers. And then other partner integrations might be on the hedge management side and things like that, where a next level of functionality that we can make available through our different integrations. On the workflow side, boy, it's really the nuts and bolts of grain buying. Our match engine manages the entire offer book for the merchandisers. They're able to monitor those open offers, close those deals, and construct contracts by pushing that information down to the ERP system, which is what Drought does. So our Drought API pulls and pushes data directly into any ERP system on our network. We've just recently released eSign, so now you don't have to pass paper contracts back and forth. We can issue contracts directly from Commodity View on the merchandiser side, and they will show up in the marketplace app on the producer side for final signature. And then we also have a chat mechanism within our solutions, but also available via API, that lets the merchandiser and producer negotiate in real time and stay engaged with that community. Just a quick shot at our data ecosystem. I mean, it is large and growing every day. We're constantly adding new CPN or commodity pricing network partners. We're always adding new fundamental data sets from the various reporting agencies. Probably one of the largest sets of exchange data available. And then you layer on top of that all of the proprietary data that we generate. And we really are a data powerhouse, and all of that is available through our various platforms, including Commodity View. So Commodity View is really, if you're a grain professional, this is the state of the art, the new standard, if you will. It's really the only tool out there that encompasses all of the global exchange data, news, reports, weather, and so on. But then also all the fundamental data around commodities, including our own proprietary content. And then as well as you can, stay on top of and monitor the markets, both futures and cash. You can check the fundamentals. You can transact physical grain, and you can hedge that grain all on a single platform called Commodity View. And you can communicate with your producers through that same platform. It's all brand new technology, HTML5 based, all delivered within a browser. It includes an Excel add-in, and it includes a mobile app. So it's really a one-stop shop for everything that the merchandisers need. And kind of again, just to recap some of the things that we have available in we call our cash prices. North American grain bids, for sure. We've got about 4,000 locations that we cover across a broad range of commodities and across any and all delivery periods that the elevators are bidding for. We have international grain bids from Australia and Brazil. We have port prices for all commodities at major import-export terminals globally. We've created our own price and basis indexes from those raw cash prices. And those are volume weighted at the county level. And then in other areas, we have U.S. Crude oil postings, retail and wholesale diesel and fuels, and then scrapyard pricing as well. A lot of this data is available in a geospatial format, either as an API that you can build your own applications with, or within our Commodity View app. So things like weather conditions, soil moisture, NDVI and NDWI, some of the things that go into our yield and production forecasts are all available in these map layers within our products. And then from that, we create forecasts. So we have our own North American yield and production forecasts. Those are being expanded to South America in the future. So this year we have corn, beans, and wheat in the US and Canada. And ready for the next season in South America, we'll have our yield and production forecast there as well. And then we also do things like, again, taking that raw cash data and creating our own basis forecasts. So there's a number of different things that we're doing today, and we're continually adding to this set of proprietary data as we go forward. So again, a couple of main pieces are the Commodity View and the Marketplace app. And you can see there in the middle what joins those together. So it's Match, which matches producer offers to the markets, and when that matches, then the merchandiser is notified that working offer is in the money, and then they can execute a contract from there. Drought is the ability to get information out of the ERP system and provide that back to the producer. So whether that's their scale tickets, balances, contracts, open balances, and so on. And then Chat is that mechanism that allows the elevator and the producer to talk back and forth, again, without leaving their platform. So they can be right in their Marketplace app on the producer side. Merchandiser doesn't have to leave his trading desktop. It's all available right there. They can communicate back and forth right within that platform. And then we have just recently released eSign, and again, that's right within both of these applications, fully integrated and integrated with the ERP system. So again, certainly we would like everyone to use all the pieces of our solution, but we do expose all of that functionality also as APIs, which allows us to work with any and all partners. If somebody wants a different application, but they want to be able to send offers from the producer to our Commodity View platform, we can do that using our APIs. So in the end, the elevator receives a Marketplace application fully branded for that elevator, which they can provide to their customers, encompassing all of that functionality and encompassing the integration to their particular ERP system. Overall, we have about 500 agribusinesses using Barchart solutions today. It represents about 3,000 grain buying facilities across the country, and this is continually growing. Okay, perfect. For now, I'm going to turn this over to Kevin, and then we'll come back at the end of Kevin's presentation for any questions and answers. Kevin, I'm going to pass the ball over to you here.
Okay, thank you, Mike.
There you go.
So here we go. So we have a few moving parts here as we look at the global commodity picture. The map you're showing are today's alerts that we have an objective analysis approach to mining the weather data to transform it into an objective analysis tool for stopped areas to identify those areas that are seeing outlier conditions, and those are the dots on the map here. And that's just one level of analysis that is provided instantaneously as a dashboard to tap you on the shoulder to let you know what's going on. And so not too many alerts firing off today for the United States, still some in Europe and now in South America as you start to roll into the next growing season. So first up here is we have a La Nina that's forecast. A little bar chart up in the upper right is showing the probability of La Nina developing, and it's pretty high probability over the next 3 to 5 months, and it starts to fade as we go on into the first quarter next year. So a couple of things we can expect with the turn towards La Nina. The little map in the upper left is a diagram of the jet stream flow that brings some relief to the Pacific Northwest. You're seeing some of that this week, but more of it will come in October and November with more rain and snowfall for the for the Cascades and Rocky Mountain areas, and to the east, it provides a bit of improved wet opportunities for the eastern corn belt, but not so much for the western corn belt. So we're entering the, even with this week's rains in the northern plains and western corn belt, we'll still be entering the winter period dry. We'll probably be exiting the winter period dry, the next chance for breaking up the drought pattern in late March, April timeframe, just ahead of the next planting window. So first up, is we got to get the first crop out of the ground here. We're expecting some wet conditions in September, but then October looks pretty benign, favorable. The wild card here are the tropical storm tracks. We had Fred and Elsa here in the last 40 days come through the eastern United States, mostly just skirting the eastern fringe of the Corn Belt, and we'll have more opportunities for storm tracks over the next 30 to 40 days. Peak hurricane season is early September, and we have a great setup for not just normal but above normal hurricane activity. So feel those tracks will make their way into the Gulf of Mexico and up into the Mississippi Valley and Ohio Valley, most likely one or two of those spawning some heavy rains, particularly in September. The dry fall conditions do evolve here in the southern plains. It is showery until about the middle of September, and then the southern plains will begin to dry out in October, November, becoming quite dry. So latter planted part of the crop starts to run out of water. Also very dry in the Black Sea region. That's been causing crops this year to suffer, but also will roll into the planting window for the next winter wheat crop for poor establishment. The focus will be quickly turning to South America. Right now it looks like a bit of a rerun of last year, La Nina developing, other climate forcing features coming in line, similar to what we saw in September, October last year. That's likely to result in a delayed start to the rains in Mato Grosso, and perhaps a little bit of rain in September in Paraná, but then drying out again as we go through October in southern early bean planted areas. It's already dry in Argentina. I expect that to continue through September before they do get some wetter conditions in October, but by the end of September, they'll probably plowed up about 5 to 10% of that winter wheat crop and hoping to replant that to corn or sunflower when the rains do kick in October. And then we've already been favorably wet in Australia. We don't see an end to that. The wrinkles out there for Australia could be potentially too wet down the road, but we still have some flirtation with freeze events over the next 30 days that could burn back some of that crop. Otherwise, we're headed for perhaps a record crop in Australia. So first up here in the U.S., the September outlook, the analog outlook that we're showing for precipitation shows a couple of tracks, potential tracks to the Mississippi Valley and then through the Carolinas and up the East Coast. So those are the most likely insertions of tropical storm tracks to deliver some wet conditions. We still have some potential, particularly early in the month, for some Alberta Clipper type systems bringing some light showers to the plains, not anything to bust up the drought, but at least add a little bit of topsoil moisture there. But the better rains will be falling in the eastern corn belt. Some of that will be beneficial for the light filling beans, but for the when we get into the harvest window, second half September, then it becomes unfavorable at that point. We roll into October, late September. The setup here is for a sharp outbreak of cold temperatures towards the last week of September. It could drive its way down to the plains. Crops are so far ahead, except for cotton, that we could see very little impact on corn or soybeans. And as we roll into October, we see more of a benign pattern and drying out as you go through the month of October and into November for the southern plains, for the winter HRW region. So a bit of wet conditions to be concerned about in September, but October does turn quieter to allow for more rapid harvest progress. So one of the things we look at for where are these hurricane tracks going, the big steering curve there is the Bermuda High, which is a little north of its usual position. And so the storms that do develop off of the coast of West Africa or spin up in the Bay of Campeche and in the Caribbean, the long reach of that Bermuda high will sweep one of two trajectories that I showed you on the map, either towards the Carolinas, or the weaker tracks are more likely to come up, as Fred did last week, into the Gulf of Mexico. It could be anywhere from the coastal bend area all the way over to the Panhandle of Florida. It's hard to pick the trajectory, but the bottom line here is that with the warm waters, and we also have supportive environment from the Madden joint oscillation, that we're primed for a parade of storms over the next 30 to 40 days. One of the things I wanted to point out in this discussion is why are we seeing such extreme weather? And a big reason for that is where are the warmest waters sitting in the Pacific and Atlantic Oceans? They're outside of the tropics. They're in the North Pacific and North Atlantic rather than within the confines of the tropics. So we don't have an El Nino, we have a neutral negative, and so currently going towards La Nina, and we have a relatively cool band of water in the tropical Pacific. So when the feedback of these warm pools of water to the atmosphere, provides a warm column of air that the jet stream has to go up and over. It creates this higher amplitude pattern, and a higher amplitude pattern is more extreme in its nature. You don't have to look any further than looking outside within the confines of the U.S. this season. The dramatic shift from very dry conditions in the PNW, Northern Plains, and Northwestern Corn Belt to suddenly wet as you get into Illinois and Missouri and down towards the Gulf states and into the Northeast. Some of the cases were at or near the wettest on record, and the same thing can be said at the opposite extreme in Minnesota, eastern South Dakota, near the going back to May 1st. So it's covering the entire, essentially the entire growing season for corn and soybeans have been at these extremes. So with a very tight boundary in between, you have a very sharp transition zone. So this is the nature of this high amplitude pattern, to see these extremes with very, very few sweet spots, benign weather areas in between. So either too wet or too dry, too cold. So we don't see this pattern changing in 2022, this high amplitude pattern. We don't see a strong El Nino returning anytime soon. That could help flatten the pattern and give us a more benign west to east flow instead of a more meridional north and south flow, which contributes to this. So it's not just in the US, it's been across Europe, across Asia. We're seeing the same pattern repeat itself. You'll see something of a similar nature in South America this year, between wet and dry areas. So it's going to be continue to be a contrasting picture here that's going to create some headwinds for crop production. So as a result of those dry conditions in the Dakotas and Minnesota, this is a chart that's showing percent of average greenness correlates to the ag trader map that we have up there that shows the percent good to excellent in Minnesota, 34%, 16% in North Dakota, and 25% in South Dakota, versus the 60s and 70s percent of normal, where you see a lot of green on the chart to the east. But this provides a little more detail than you get from the generalized state charts. You can find some better pockets within Iowa, for example, and poorer pockets in Indiana and Illinois that aren't necessarily represented in that map. So as we're traveling through the Corn Belt and we're sampling, it helps to know where these better pockets are versus the more negative pockets. So what's upcoming here, what's left of the growing season, we still have some adverse weather this week with temperatures running into the 90s across the southern 2/3 of the Corn Belt. Nighttime lows also very warm, mostly in the 70s. So the combination of that is advancing crop growth, accelerates the crop development at the expense of grain yield. So reduced dry matter accumulation, lower test weights for corn, and smaller bean size for the beans. So the areas that are at most risk could be identified by this map. This is a 14-day rainfall departure. The bright yellow areas have seen significant deficits in rainfall over the last 2 weeks. And at this point in the season, the crop gets a signal that says, I got to go to maturity as quickly as possible to make a mature seed. So instead of hunkering down, waiting for the rain, it actually races. The stress causes it to race quicker to maturity. And we see a pocket of that in central Indiana that somehow that didn't pay the water bill, kept missing the rains. Southern Iowa, which was very wet in parts of July, has turned quite dry. And that's, we have a fairly shallow rooted crop there. So that's having a significant negative impact in that region. And we are getting rains across the Dakotas and Minnesota. So this area is seeing some break. It's too late other than to stop the bleed out of the yields in the Dakotas and Minnesota, but you're not going to see much recovery potential because the crop is well advanced, about 10 days ahead of average in that part of the belt because it's been such a warm growing season. So this chart I'm showing you here is on the left is a dry roll. It shows the percent coverage, what percent of the soybean growing areas had less than an inch of rain in the last 15 days. So you can characterize this as a flash drought rule. Last year we had a lot of flash drought conditions develop in the second half of August, caught a lot of folks by surprise because it shrunk down the size of the beans, and USDA reduced their crop yields between August and I think October, November by about 1.5 bushels, and it was all due to the shrinkage of the size of the beans related to that late season dry spell. So we're seeing something of a similar nature, not quite the intensity, but we also saw a drier spell earlier in the late flowering period that did cause some pods to abort or seeds within the pods to abort. So we had a little bit of a hit on the yield earlier this month and in the end of the last month, but we're also seeing another period of stress. So the map in the upper right is showing areas where the topsoil is dried out, and that covers about half the belt right now. And we're going to see some shrinkage of that with some rains in Minnesota, but we're expanding it in parts of the eastern corn belt at the same time, because the map down below is only showing scattered rains over the next 10 days, while heavier rains, mostly Thursday and Friday, come back through Minnesota in addition to what's falling today across northern Iowa and Minnesota. Is another band coming through that area at the end of the week. And the models are also hinting at a tropical storm pushing inland in the coastal Bend region by about the 4th or 5th of September. So I'll have to keep an eye on that for crops along the coast. So at this point, we're looking at, we've had a drier spell that's been taking the yields down from close to 52 bushels down to a little bit under 51 in our model. We run an objective-based, regression-based model using our proprietary weather database. The 10-day forecast, given how dry it looks in the eastern corn belt, despite the holding the line, so to speak, on yields in the northwest, still has us leaking out 0.5 bushel over the next 10 days. We're using a 51.3 trend yield, and I'll explain why we're a little bit higher than what some other folks are using based on what I saw on my crop tour this week. So yield is still declining. The rains or no rains over the next 2 weeks can determine whether or not we have a shot at dropping below 50 bushels per acre, but most likely will be somewhere in that 50 to 51 range as an outcome for this soybean yield. I mentioned we have warm nights. This is a chart that's showing an accumulation of nights that have been warmer than usual. So if it's been above 70 degrees, it shows a cumulative percent of that accumulation. So we actually have had below average warm nights through the month of July. In August, we started picking that back up again, going back above average. 2010 was, and 2011 were the years where we had a lot of warm nights, and that sunk the yields lower. So these warm nights are still having some negative impact. Warm nights for corn cause higher nighttime respiration rate, so it acts as a sink for the daily photosynthetes are used up in its nighttime respiration, so it doesn't have a chance to translocate into the grain. The plants are much more efficient today than they were 10, 20 years ago at surviving these warm nights, but it still is a bit of a hit on the yields when you have a string of these nights, which we have about 5 or 6 together this week. So as a result, it's still sucking some of the yield out of the U.S. corn crop, even in the eastern areas which have moisture in the ground to finish the crop. The warm nights are still an impediment to the grain fill. So that's included in this 0.5 bushel drop in the next 10 days. So not a lot of weather sensitivity at this point. We think the final corn yield is somewhere between 172 and 174, 174.5. I think the USDA's 174.6 probably defines about the high side for this crop. So we did do a crop tour a couple weeks ago through this route. It cuts through Minnesota, southern Minnesota, most of Iowa, central northern parts of Illinois, and parts of Indiana. And I just wanted to show one of the comparisons here to the Pro Farmer crop tour that finished up last week. So when we take measurements, by the way, Chip Flory and I were in the same car together, one of our first crop tours. So it's fun to see him run the crop tour now. So Chip and I go back a while. But we use the Pro Farmer method as one method for calculating yields in the fields. So what I'm showing in the first column here is that Pro Farmer method that we used to calculate yields, and probably the more comparable states where we have a more robust sampling is in Iowa and Illinois. And just note that our samples correspond pretty closely to the adjusted Pro Farmer, should be Pro Farmer, not Famer, crop forecasts, which are higher than what their yields were measured by the by the folks on the tour. And our yield component, which is looks at the number of grains, an estimate of grains per bushel. So it's a little bit different approach to coming up with a field level estimate. Those are all much lower. And this was the first year of the past 8 years that I made this comparison that Pro Farmer was actually above our estimates. So something's askew here. Either there are adjustments higher, may have been too high. It just appears that we were, the majority of the measurements that we took, the Pro Farmer approach gave us higher readings than the yield component. We take an average of the two. We don't think either one is perfect, but an average, I think, gives you a better idea. So anyway, just a thought here that the U.S. this is the first time in 8 years of comparison, of making these comparisons, that the Pro Farmer is higher. So what were the things that we saw that were negative? Well, besides the drought impacts in Minnesota and parts of Iowa, there's also some too wet impacts that we saw. Those darker green areas show the anywhere from 250 to 350% of normal rainfall that fell between June 20th and July 15th. So that caused a significant amount of nitrogen leaching at the time when the crop demand for nitrogen was going higher, and as a result, we're seeing some impact on the yields on the year development. And so I'm showing you a picture of two samples from this crop tour that in central Illinois between Bloomington and Decatur. The field on the left sample that was 30,000 ears per acre, which, by the way, was another nick on the yields. We saw on average the ears per acre were about 3% below the long-term average. So that was one hit on the yield. The other is the impact of nitrogen leaching. So we saw variable size ears and some tip back in this field that yielded about 200 bushels per acre. That was about 10% below the average we typically see for this particular area. And another field just a few miles away saw the greater effects of nitrogen leaching. Both were in dough stage and skinnier ears, and this, even with a higher plant population, we still measured only 170 bushels per acre. So this damage was all related to wetness. Last year they had other problems that were of a similar nature, freeze and around Mother's Day, that set the crop back. But this year it was just too wet at the wrong time. I didn't hear any of that really discussion coming out of the Pro Farmer tour this year. On the flip side here, something that we're seeing in the fields that we hadn't seen before the last 3 years for soybeans, I think suggests there's a new genetic improvement that could kick the yield higher. So what I'm showing you in this picture, I've been torn away the leaf on that axle, is that in the middle part of the plant, we're noticing that in addition to the original set of pods, there's 3 buds on each node that can send out, can essentially bloom and send out a set of pods. And the first set, usually puts out 4 or 5, 6 pods in the middle part of the plant. But in addition to that, we're now noticing it's like a fountain that keeps giving, more pods coming out even after in the mid-seed fill. Normally, you would expect to see this kind of activity at the top of the plant at this stage. Early to mid-seed fill would be the growth stage, about R5. And but still we're setting new pods in the middle part of the plant. So you end up with potentially 6 to 10 pods in the middle nodes. Of course, this requires more water, but I would liken what you're seeing in this picture, the ability to set at least a partial second ear on a corn plant. That's takes us up to the next level of yield potential, I believe, for soybeans. So just a couple observations there from their crop tour. Just hitting on a few other key areas. You're still watching the dry conditions. We're going to get into the planting window for winter wheat here over the next couple of weeks. So that's a problem. That's a flashpoint, but we're still finishing up the growing season for the spring wheat, corn, and sunflower. The widespread dryness, we've had 2012 type heat, night temperatures running 100 degrees in the Volga Valley and overnight lows in the 70s, just punishing type heat that drove the corn and sunflower yields down. And the spring wheat hasn't escaped this in Kazakhstan, the Urals, and Volga Valley in particular. We still have heat in the forecast, the 10-day forecast showing above normal temperatures. So it's just been a rough growing season across the spring wheat belt. The only area that's had somewhat of a less negative impactful growing season has been in the Siberian part of the growing region for spring wheat. But just as an example of how bad was it, and this is a dry roll for Kazakhstan growing area. So there's a light blue line that represents 2010 and a dark brown line that represents 2012. And we did catch a little bit of a break of rain second week of July, but otherwise we were pretty neck and neck with those conditions of percent coverage of dryness. By this rule, percent of the area saw less than an inch of rain in a 25-day period, and we finished quite dry. And those 2 years finished between 71 and 74% of trend yield. So we're right in that ballpark here for upwards of 30% below trend yields in Kazakhstan, and similar losses across the border in the Urals and into the Volga Valley. So this leaves us with a crop production. These are estimates that come out of our crop model. You have the red numbers there indicating the current estimates, the blue 10-day forecast versus USDA right now are about 6 million metric tons. But the USDA on spring wheat, I think they overshot to the downside on their winter wheat crop. So our total number is not that far off the USDA's 72.5. And the Kazakhstan crop are running about 10% below the USDA. So I think the outlying difference here right now is probably more Kazakhstan, since our total Russian number is pretty close to the USDA. But this gives you a view of ability to provide, transform the weather data into a quantitative analysis, not just for current, but also what's the 10-day forecast doing. So rolling into the South American planting window fairly quickly. And so the outlook here we have for September shows another slow start to the rains in Mato Grosso. And we have some rains here in the front part of the forecast for Paraná, but then it looks like it does dry out as you get through this mid to latter part of September. October starts to see some rains coming back into western Mato Grosso, but then we're also seeing dry conditions hanging on in north central parts of Brazil with Bahia, northeastern Mato Grosso, northern Goiás, all the way up to the northeastern states, seeing another slow start to the rain. So while we've seen in the past, these slow starts don't do a whole lot necessarily for reducing the size of their soybean crop, it does delay the arrival of that crop by several weeks. So it expands our U.S. potential export program. Despite the advertising for dryness in Argentina, there is a wet signal for October. So the October planted corn and sunflower should get off to a great start before it dries back out again in November. So there is a window of opportunity for Argentina to see a break of the drouthy pattern, but it's only going to be a few weeks. So it's a complicated chart here, but the reason for showing you this is that the MJO is kind of the flapper door here opens the flapper door for rains or shutting it down. We're in this phase 2 right now, which is where the star is. Phase 2 is wetter in the diagram, correlated diagram to the right for northern Brazil. But as we go through phases 3, 4, and 5, which is where we'll be by phase 5 by the end of September, that's drier for northern Brazil. So this in tandem with the oncoming La Nina keeps the rains delayed in northern Brazil. So this gives us a pretty high confidence forecast for expecting a delay in the rain. So this is the repeat. This is a replay of 2020. The MJO is going through the exact same phase changes, advancement in September of 2020 as we're projecting this year. So what does that mean? So, we talked about soybean delayed time of arrival, but in the 5 years before the current crop harvest, we had 5 cases in the last 20 years where we saw rains delayed until October in Mato Grosso, and that causes a shift in the crop calendar for the planting of the safrinha corn. So the reason why that's important is that the safrinha areas, particularly in Mato Grosso, has a hard stop to the rains in early May. And so if you have a hard stop, you have a late planting and a hard stop to the rains, you're going to truncate the growing season. This current year, we truncated it quite a bit. Some areas in Paraná stopped raining about middle of March, not early May. So that was a real train wreck. And we ended up about 30% of below trend yield. But we do realize these delays in Mato Grosso and to some extent in Paraná, you can shave about 11% off the top end just because of the delayed planting window for safrinha, assuming a normal end of the rainy season. So if your original estimate was 90 million metric tons for the next safrinha crop, you would have to adjust that down to 80. So that would take you down about, overall to 108 versus the USDA's approximately 118. So that's the importance of rains in September and early October and how it can cascade into problems down the road for the safrinha crop. In Argentina, it continues to be quite dry and frosty. Both have been burning the crop back, but we have a case here in 2011, this light blue line, which still ended up with decent yields. We lost area because we had a poor start, but the rains turned back on in September and October, so we had some decent yields. But so this period of dryness goes towards the establishment of the crop, and out of 6.5 million hectares, you might see anywhere from 250 to 500,000 hectares plowed up because it didn't establish well, and replant it to something else, again, more likely corn or sunflower, as the rains turn back on in October. So more of a down the road meaning once that October planted crop gets planted, and it's about 35% of the planted area now. It used to be 60%, but they got tired of getting burned by these hot dry spells that showed up around Christmas time in these La Nina years. And we can expect more of the same this year, another hot dry spell around Christmas time again this year. And last year with that evolution of the pattern, we lost about 3 million metric tons of corn out of that first portion of the crop. And most likely if they plant 35% of the crop in October again this year, we'll take another 3 million metric tons out of this crop. So it shows the difference, the mean outcome of the La Nina years versus El Nino years, which tend to be wetter, takes us down about 12% in the mean outcome for these crops. Doesn't even have to be La Nina, it could be neutral negative and still have a negative impact. There are other aspects of this pattern that can either amplify or modify the effects of the La Nina. We won't get into that just today. The Australian wheat is seeing below average dryness. We had a dry start to the planting window in May, so that did set back the timing of the crop a little bit. But since late May, it's been raining consistently, and this dry rule is showing near 0% dryness coverage, meaning what percent of the area is seen less than an inch in the last 45-day period. So it's a pretty high bar to cross. But 10-year average was around 35%. It is a relatively arid growing region. We're not getting into the flowering period, and we're still below average dryness as we were last year. And so we're hovering somewhere between the case of 2016 and last year, which would put us into the mid 30s for production numbers for Australia. So things are looking pretty good there. Anyway, I'll stop there. If anybody has any questions, happy to answer.
All right, sounds good, Kevin. Thank you very much. Very interesting, and I'm sure we'll have some questions come through. If you guys do have questions, just use the panel within the GoToWebinar framework, and just send those questions in, and we'll get to as many of them as we can. Kevin, one that came in was up here in the northern plains. We had pretty good rain over the last 24 hours or so, and it looks like it's going to continue. You mentioned it's too late for this season. May arrest some of the decline in the yield, but not much recovery. What does it do for us for next season, though? Does that help with soil moisture for next season?
It will help. Anything helps at this point, but we still have to get into the winter period, so some of the moisture that's there now could still evaporate out before it kind of gets locked in with some snowpack. So we're about 6 to 8 inches in deficit. We're putting a couple inches into the ground, so it's still not a drought buster. But everything helps. Typically, these droughts bust up in March and April, and we see some heavy snow events or rain events to bring us out of these drought cycles. So I don't expect we're going to get enough precipitation over the next 4 to 5 months to break us out of this drought pattern. And so the next chance will be early spring next year. I would mention that the rains, while they're helpful for denting the drought, we do have some potential negative impacts on grain quality. Most of the U.S. crop's harvested, but most of the Canadian crop is not. So we see another week of showery activity. We could see some downgrades out of the milling quality into the feed quality. Would be another final dagger on this crop that we already see it at 30% below trend in Canada.
No, very good. Do you do long-term forecasts so we can get a look at what the snow cover may be this coming season and how that might assist for
La Nina dictates we're not going to see much snow cover in the northern plains and Canadian prairies, below average snowfall. Again, the window may open briefly at the tail end in March. I don't that we could pick up close to normal. But at that point, if the ground, the reason why it's important to get some early snowpack is that better chance for that moisture to leach into the ground. If the ground freezes solid and then the snow sits on top, a lot of that snow will make it into the soil profile and just end up in the stream and riverbeds. So timing is also important when the snow falls. That's why I think late spring, when the soils start to fall out, you get some wet snow or rain events is going to be the best opportunity to see improvement. But again, we'll be sweating, I think, through the winter period and hoping the spring sees a change in the pattern. And I think you will see some improvement, at least in the topsoil moisture profile, to help out with the spring wheat planting next year.
Okay, perfect. One other thing that may have impacted crops this year, and one of the viewers here would like to get your opinion on that, is that with the fires in Canada and out west, there was quite a bit of pretty muted sunshine over the whole summer. Do you think that had a major impact on yields, or was it primarily the moisture?
Well, there's a benefit in that it kept the daytime temperatures down, but nighttime temperatures somewhat more elevated. So it has kind of mixed impact. The reduced photosynthetic activity, I think, in addition to the drought in the Dakotas and Minnesota, may have been a combined contributor to lower pod counts. The pod set period needs maximum sunshine. So even cloudy, rainy conditions during the pod set period, it seems counterintuitive, but lack of sunshine does reduce the pod counts for soybeans. And for wheat, and for it's hard to separate out the losses for wheat between what might have been caused by reduced photosynthetic activity and the drought. So I'm not sure we're going to have a clear answer on that, but intuitively, reduced photosynthetic activity would have some negative impact, net negative impact on yields. But for this year, it's the 800-pound gorilla here is the drought, and the mouse in the room is probably the cloud, the smoke.
Sure, makes total sense. Okay, the last question that we have is, do you anticipate USDA will lower its average corn yield through harvest similar to last year, based on your experience?
Yeah, I don't know. September is a wild guess because I don't think they have enough quantitative information to make much change for September. But I think for October, and certainly November, they will have harvest information. Soybeans, I think they're already low. The bigger open question here for soybeans is how we finish over the next 2 weeks. So there's a shot we could drop below 50, but most likely above 50 at this juncture. But for corn, I think a bushel and a half lower in October, November, and certainly by January, we'll see those numbers come down for corn. But soybeans, I don't have a strong opinion for because I think they are already aggressive in taking the yields down.
Very good. Well, thank you very much, Kevin. Appreciate the insights and really in-depth review of everything that's going on right now. Your contact information was up on the screen during the Q&A period. So if anybody has any questions for Kevin, you can reach out to that contact info. If you'd like to see more around Commodity View and our marketplace apps and other solutions for agribusiness, you can reach out to me. My contact information is on the screen. Or if you're a current Barchart customer, just reach out to your sales representative and we'll take you through everything that's new. So again, thank you all for joining us, and we'll look forward to the next time. Have a great afternoon.